Hello everyone, Good Investor here. I hope you're having a phenomenal day. Wanted to drop this brand new video. It is going to be about the markets and some of the really big news that happened in the market that impacted it to go down, as you can see here. And I want to talk a little bit about the research I made and want to talk about the stock that I am really interested on, and it could be the perfect timing to buy. So please make sure you watch the video till the end. It would be a longer video, but you definitely will take a lot of things out of this because I made a research that I want to share with you, and all I am asking in return, if you could smash that like button and consider subscribing to the channel if you haven't done so. It would definitely help the channel and I would really appreciate it. So let's deep dive into the video right away, and I want to speak about S&P right away. And as we can see, S&P was going up to the point around 1 p.m. and these news happened. So what are these news? You probably heard a little bit, and if not, I'm happy to share with you that Biden announced a new tax bracket, and there are some new tax rates. Obviously, taxes going up for people making more money, taxing the rich, and whoever is making more is now going to pay even more than it used to be. So let's go into this article where it talks a little bit about what exactly happened, and we can see here that literally the article is saying that U.S. stocks closed down on news of Biden tax proposal, and the tax proposal that we're talking about is that there is a marginal income tax rate that hiked from 37% to 39.6%. So what does that mean? So let's look at the brackets first of all. So there's a lot of brackets, and if you haven't known before, each bracket is giving a specific tax rate. So if you're earning between 85 to 163, you're gonna be taxed 24% for that specific money earned. So in the first 0 to 10,000, you'll pay 10%, and then from 10,000 to 40,000, you'll pay 12%. So this is called marginal tax rate. And before, this is actually an old information, it was capped until 37%. So whoever was making $500,000 or more, they were paying 37%. However, from now on, after these news, it says that there is another bracket now that is for anyone who is making $1 million or more is now going to pay 39.6% on every dollar made after 1 million. So that is essentially another bracket. So if you're making between $500,000 and 1 million, which I don't know if you are, but I am definitely not making that. So not that much to worry about, at least as an individual investor as I am at this point. So $500,000 to 1 million, I would pay 37%. I don't even know if I go to that rate even. So I'm not really concerned about that. What I am kind of liking in the situation that the market is down, and this is a perfect moment for those of you who want to go in and jump in the markets, because we've been waiting for these days. Usually I look for these days and then a perfect timing to getting into the market. And another reason to getting into the market is that this research that I made, it's actually out of the research paper that was released by JP Morgan about it's called JP Morgan Guide to the Markets, and it was shared very recently for as of March 31st, 2021. And I found this chart very interesting. So I know it's a lot of numbers here. So essentially what it tells you, it's a year-over-year S&P growth for a specific year. So as we can see, there's two recessions, both the dot-com bubble as well as the housing bubble that happened. Both recessions, the S&P was returning negatively. We see this. However, as soon as it is negative in those years, the stock market is actually performing far better than it usually was before that. So here we can see in dot-com bubble, it did do the same way. In 2008, the housing bubble, this exact same situation. And in 2015-16, there was another small recession that happened. Stock market did very well. And now we can see that in 2020, the year-over-year growth of S&P 500, which is the broad market, actually returned negatively, -22. And looking at this pattern, it is a no-brainer to predict what is going to happen in 2021 as well as the years to come. So definitely 2021 is the year to invest. So perhaps this is the perfect timing for some of you guys who are looking for it, because a lot of institutional investors are selling off these days because of the tax bracket, but it doesn't concern me and you because most of us do not even go to that bracket. So it could be a perfect timing to get into the market. So that being said about the market news, I want to talk a little bit about the stock that I was initially talking about. And this is going to be another Chinese company that I want to talk about. And it was beaten down to hell because of the recent situation with Archegos. You probably didn't hear about that, but you can look out for it. I don't want to spend a lot of time on this video talking about it, but essentially there was a huge market sell-off of Chinese companies, and Tencent Music was one of them as well, along with CBS and many other companies. But as you can see here, the company was doing amazingly based on the chart, and then it just dropped significantly since then. It was as high as $30, and then it dropped to 18%. So there was a lot of downside here, which makes it a perfect timing to get in. However, before going into anything, you definitely want to check the financials and see if you believe in the company. So Tencent Music is essentially a entertainment group. Look at it as a Spotify. So they're a direct competitor to Spotify, and what they're doing is essentially it's a stream of music, right? It's no brainer. And let's look at their financials. We can look here up that we can look at the financials of Tencent as well as Spotify for a comparison, for the sake of comparison. So let's look at Spotify first of all, just to keep it clean. We can see that the market cap for Spotify is 50 billion, whereas the market cap for Tencent Music is 31 billion. So it used to be around 50 billion as well, but Tencent Music did drop because of, as we spoke, from its all-time highs. So it did drop to 30 billion. So there is an opportunity, which is a good thing when I look at financials. Another thing that I usually look at is their actual financials. That was just market cap. But if we look at actual financials, we can see that this is a beautiful chart. I mean, you definitely, as an investor, as a good investor, you definitely want to look at this type of chart where a company is making a steady growth in revenue as well as gross profit. And we can see that if we look within financials, we can see revenue just growing significantly from within the past 5 years, from around 2 billion to about 8 billion, which is phenomenal. However, another thing is I look right away into their profitability and see if the company is profitable. And Spotify, along with many other technology company, which is a normal thing, but also alarming to some extent, it's not a profitable company. So meaning they're not generating a net income. So they have been negative for almost all the time that I have this data here. And we can see that the net income actually dropped even more from the past 2-3 years, right? In 2018, they did one of the best years, generating negative 78 million, but it did drop since then to around 200 million and then negative 600 million, which is quite a bit. And this is to some extent alarming, but you also need to look at the other side of whether you believe in the company. So Spotify is very good, but let's look at Tencent Music. What is going on that side? So if we look at their financials right here, and we can see that there is a steady growth as well, which is great. Steady growth of both revenue and profits. And if you look down here, we can see that they are actually profitable. So they are generating a bunch of money. This is not actually in dollars, but it's in Chinese wons. But money is money. And as far as net income is positive and positively growing. Look at this, 82 million to 4 billion of Chinese wons. So it is quite a bit. It is an amazing growth, and I definitely love this. And especially considering that they are underpriced right now. So on Yahoo Finance, you can also see here that I usually also track their PE ratio and see what is the difference. Since Spotify is not a profitable company, they don't have a PE ratio, but as of now, Tencent Music's PE ratio is around 48, and Yahoo Finance sees it as a near fair value, so which is also a great thing to look at. So look at this 1 year chart, right? I mean, this is a no-brainer for anyone to get into the market as far as you do your due diligence as well. So we saw the financial steady growth, love it. They beat the market expectation from time to time, but they usually meet it, which is also great. And let's look at Robinhood and look at their price differently. So we can look at this chart and you can see that I do hold it. I am negative, but don't let this scare you because I'll talk a little bit about it. So essentially it did drop significantly, which I love, and I definitely want to go in more into this and look at this beautiful chart. And definitely go in if you're interested, but I usually like to do it through options, and the options that I love is 2023. So think of it this way. So do you think that if you think that Tencent would grow by, let's see what is the difference, right? So let's go to calculator and look here. So we know that Spotify's market cap was 50 billion, assuming Tencent would go to 50 billion as well. So 50 billion, as of now, they're about 30 billion in market cap. That would give us around, if it goes to 30 billion, that would give us around 66% return. That is assuming it just goes back to its price, which is amazing. And I love that number. But when I am really certain that this is going to happen, and 66% within 3 years, I mean, until 2021, let's call it 2 years, until 2023, which is very doable for a technology company to grow 60%. Absolutely, within 3 years, within 2-3 years, absolutely. I mean, within 1 year, they already grew 68%. That is not even combining the all-time high, which was here, and it was around 185%. So absolutely, this is a no-brainer for me. I am definitely going in, and I would definitely go in with their 2023 options, and I would definitely recommend you to do that because their option price is very, very cheap right now, under $1. So definitely consider that if you're not, and look deeper into that. So this is it for today. I think I covered everything. Let me know what you guys think about Tencent Music, if you ever saw it as an opportunity, about the tax brackets, if you think that they would impact you at all. Other than that, I want to call it a day. I will talk to you later. Love you.